So you're exploring sort of some different types of enterprises to fund in terms of both startup and existing, across some different sectors, and across some different geographies. Do you think providing the funding is sufficient? Is that the real niche that Acumen's going to kind of stay in?
We don't think capital is the constraint. We think it's management assistance. We think it's business insights. We think it's the network of our entrepreneurs talking to one another. It's sharing best practices. So we've invested heavily in the knowledge creation and sharing. We've invested in a fellowship program, which we think will bring talent to talent-starved enterprises. So the capital is important, and we believe that if we were just providing capital, if we were just providing knowledge and management assistance and talent, we'd be a consulting firm. And to have an equity ownership or a real stake in the company and bring resources to bear aligns our interests, gives us a meaningful say in the strategic direction of the enterprise in a way that a consulting firm might not alone or just a financier. So we think that the model works, and it's the complementarity of capital, knowledge, talent that works together.
Now, some might argue that it's starting to sound less like a venture capital model and something a little different. How do you reconcile this kind of, there are important aspects, but should Acumen be the organization doing it? And why have you decided that it's something that you as an institution want to cover?
Right. The exact benchmarks for how much you spend doing due diligence and providing post-investment management assistance in this space aren't totally clear. The transparency, information in the sector is still not where we'd like it to be. But the rule of thumb is somewhere between 20, 25 cents on the dollar for our portfolio team to help them write the business plan, work the investment through documentation, and then provide post-investment support. It's a combination of the fact that the deals are typically smaller than a typical venture fund at $1 million versus $3, $5, $7, $10 million, and that the work is a little bit harder. These are new models, new markets, new customers. The other stuff that we do in terms of knowledge and talent in the fellowships program is more like a nonprofit. But if you isolate the portfolio costs and the resources we bring, it looks fairly, it looks close to the other social investors who are also in that 20 cents on the dollar. It's why we don't think that venture capital at this missing middle level is financially viable at this point. That a 2 in 20 fund would have a very hard time on that 2% expense base. There are just too many transaction costs. The amount of support required is too much. It may be that there are funds that come in after and do follow-on investments in an Acumen fund that can vet deals that have been through an Acumen fund or an Ashoka or an Ian Co. and very, very cost-effectively source those investments and provide the follow-on capital. But right now, the stage that we're in terms of the assistance we provide, the economics wouldn't work out for a commercial venture fund. But we think that our economics are improving, and we think that they will get closer and closer to the point where we believe the capital markets will look at this sector as a viable asset class.
How do you resolve the tension of you're investing potentially more and more in developing fellows and in knowledge management, right, which is harder to develop a return from, so it looks less and less like a sustainable model for you guys. Do you have some tension in the organization about whether you want to pursue that or not, and what conclusions have you reached around that?
No conclusions yet, and there is tension. Again, the portfolio work on its own, we want to become self-sufficient over time. If you get an 8 or 10% IRR in your portfolio with a 20% overhead costs over 5, 6, 7 years, the returns can pay for the direct portfolio activity. So if we aspire to make the funding work self-sufficient, we can then go out into the philanthropic marketplace. If our knowledge isn't worth anything and foundations like the Skoll Foundation or the Gates Foundation don't want to pay us for the kind of work we're doing in metrics or working with WDI and helping generate cases, then they'll tell us, and we won't be able to generate the resources to do it. We're not going to do that from unrestricted resources. We'll go out and find philanthropic support for it. The same is true for the fellowship. are looking at different revenue models for the fellowship, but a number of corporates have contributed money to have their employees go through the fellowship program. And if we can come up with a sustainable business model on the fellowship program independently, then we think it's got a place in the philanthropic marketplace. As long as we're clear that we're looking at them as separate pillars of activity, then we can justify, I think, the portfolio funding work.
And how do you see them as being synergistic as opposed to just separate pillars?
It's hard to separate the work that we do. I mean, the credibility of our knowledge is generated from the frontline insights that a portfolio manager who's working on doing due diligence in a hospital chain is going to surface. And the kind of talent that we're able to bring to bear with the fellowship program to provide the value proposition to the hospital chain, which is being approached by 2 or 3 different funders, helps differentiate Acumen Fund. So, the knowledge makes the investor or the portfolio manager's job easier, theoretically, can contribute back to that knowledge pool. The talent makes us a unique investment resource, again, in an increasingly competitive landscape where there are lots of folks chasing, as we talked about, too few deals. If we have this pool of talent that we can bring to bear, we think that the combination of those assets is going to make us unique in the marketplace. It's not quite clear how they all fit together at times, but we have a sort of a long-range picture of understanding that it's not the size of a $100 million or $500 million portfolio that's going to make a difference. It's the lessons, the models that we lift out from the work that will have the long-term impact. And it's going to take a lot of effort through this sort of talent mechanism to generate those models. So, again, the pieces of the puzzle sometimes don't quite fit together, but we think that the directionally we're onto something.
Do you have a sense of, say, not 4 or 5 years from now, but 10 or 15 years from now or longer, what does Acumen look like?
We've talked about splitting out the fund into something that would be closer to commercially viable, and we're, again, looking at tapping into the capital markets. And we've talked about lumping the knowledge and talent into something we sometimes internally called Acumen Fund University, that would in fact be a combination of training and leadership development, policy and knowledge sharing, networking for social enterprises, and that it would be really something much closer to a traditional fund that is tapping into the capital markets, like microfinance institutions have been able to raise money today. And on the other side, a little bit more coherence and heft and independence on the knowledge and talent work.
So as you reflect back on your experiences serving base of the pyramid ventures over the past years, what are the big lessons that you've learned? What are maybe the challenges you faced and the lessons that you've learned in this space?
The big lesson is that no matter what the business plan says, add 18 months. That there's a lot of raw execution challenge. A second lesson is that the communication, the game of telephone, literally in a global institution, is challenging to deliver a consistent message from entrepreneur to portfolio team in Hyderabad or Pakistan to portfolio team member in New York, and that over-communicating is absolutely critical. Third, that really capital isn't the constraint. There's enough money out there. It's unlocking the liquidity in the local markets as well as in the global markets. It's the talented resources that are needed to help build these enterprises.